What is going on, ladies and gentlemen? Today we are going to be talking about the reverse iron condor. Now, the reverse iron condor is a really awesome strategy. It's exactly like the normal iron condor, except instead of selling two credit spreads, you buy two debit spreads. So you buy a debit spread on the call side and you buy a debit spread on the put side. So if you haven't seen the original Iron Condor video, be sure to go check that out because that'll give you an idea of how the Iron Condor is set up and you'll understand why you set up a reverse Iron Condor this way. So let's go into a stock that has had earnings recently. Zscaler had earnings right after market close, so we'll be able to check this one out and give you guys a good example of what a reverse Iron Condor is. So before earnings, Zscaler was trading at about $65, $64, and on earnings they dropped down to $57.30, and it could drop down even more when the market opens in the morning, but that's just the big earnings move in one chunk. So if we go to the options chain and we go to the next week's, and then we got to go to the put side, and you can see that everything on the put side was really expensive because the stock was trading up here at about 65, 64.5, and it was pricing in about a $6 move total because you would add the call and the put at the money. And you can see the 65 on the call side was trading at 435. So about a $6-8 move on this stock. So if you wanted to get this $6-7 move, you would have had to pay about $100 in order to just play the put side. And then you probably wanted to play the call side too, just in case it went up, because you really can't predict how these stocks are going to move. But on the call side, the $8 move would have been about $100 as well. So instead of paying the $100, what you would want to do is you would want to do a reverse iron condor. So if we wanted to play this play for cheaper, we could have bought this 57.5 and then sold this 57 and made a debit spread. That would have costed $5. It probably would have costed a little more. I don't know if that's accurate. Probably would have costed like $10-15. And then we could go on the call side and say do like a 73.5 and a 74. So our total cost would be $20 to play both sides rather than $200 on both sides, because if we got rid of this one we sold on both sides, it would cost $270 total to play this play, and that's really not that great in my opinion. It did move the $7 or $8 that the options market was predicting, but you would just be barely at the money if you would have spent $100 on this play, and your other contract would have been worthless because the stock went down so much. So if you wanted to get exposure on this earnings play, but you didn't want to spend over $200, you could just sell this 57, like I said, go to the call side, sell the 74. So we made a debit spread on both sides, and this is called a reverse iron condor. Robinhood doesn't know what this is for some reason, but that's what we're doing essentially, is a reverse iron condor, because instead of selling two credit spreads, we're buying two debit spreads. Now, if you don't know how debit spreads work, I highly suggest you go watch the debit spread video. But what this is saying is that ZS is not going to go past either two of those contracts we sold. So the stock was trading at 65. We're saying that the earnings is going to move all the way up to 73.5, but not farther than $74. So our max gain on this play is only $50. But we also have to price in our premium we paid, so we have to minus $20 from that. So our max gain on this play is only $30, which really is not that great in my opinion. We could have got a little farther out, or maybe we could have sold like the 74.5 and got a wider spread, and that would have been a lot better. Let's see what would happen if we did that on the put side. So if we made the spread wider on both sides, it would be about $45 for a $100 max gain, because your max gain's the difference between these contracts, the one you bought and the one you sold, and that's $1 in between, so that's $100, because the options contract is the right to buy 100 shares, but you're still not making that much. You're just spending very minimal. So if you don't want to cap your gain on these options plays, then it's better to just play the naked option, and you're going to be paying the $200 on both sides. Say you really think that ZS is going to move down to this 57 level, but you don't think it's going to move past like 56 or something. Maybe doing this reverse iron condor will be more beneficial because your price range is going to hit. You're going to make the $100 max gain. So if it doesn't go any farther than 56.5, that would be a really good play. But say ZS opens in the morning and it drops down to 54, you're still only going to be able to make $100 on this play, which is really bad because if it went down to 54, that would be about a $300 max gain on this play, not even counting like time premium or anything. So that's really the downside of the reverse iron condor, is it caps your gains, but you're able to get in these earnings plays or any play in general for a lot cheaper. So if we did it on like a bigger stock, we might be able to get closer into the money for cheaper than buying something like super far out of the money for $100, and that's really the most beneficial part of these reverse iron condors. Say we trade like a $500 stock and the earnings moves predicting like $20, we're not going to be able to get an options contract that's $20 away from where the stock is trading currently for less than $100, $200. It really depends on the volatility. It might be even more if we're trading something like Amazon or Tesla. So doing these reverse iron condors are very beneficial because you might be able to get that contract that's closer to in the money, closer to that $20 move for half the price, if not less. So that's really the most beneficial part about reverse iron condors. You wouldn't really want to do it on a stock like ZS. You'd want to do it on something that moves a lot bigger, but there's no stocks right now that made like huge earning moves that are super expensive, so I can't give you guys a demonstration on that, but I'm just trying to give you an idea of why you would want to use the reverse iron condor, and it's really just to make your plays cheaper. But if the stock moves way past your reverse iron condor in one way, then you're only going to be able to make the max gain on whatever debit spread on whatever side, the call or put side, and that's really crappy. But you always want to have more option strategies that you can do under your disposal, because the more you know about options, the more strategies you know that you can use, the better chance you have of being profitable over time in options, because you're able to scope out these plays, and there's always possibilities to do plays like the reverse iron condor or even the normal iron condor. So that's super beneficial. Yeah, you're capping your gain, which sucks, but you're spending literally like a quarter of what you would normally spend just getting the 57.5 and just getting the 73.5. So that's really beneficial in my opinion. And yeah, that's how you do the reverse iron condor. It's nothing more advanced than that. It's just selling two debit spreads, one on the call side, one on the put side. And what you're saying is that the stock is going to move past either the contract you sold on the call side or past the contract you sold on the put side. But if it goes, $50, $100 past what you sold on either side, you're not going to make any more money than the price between the contracts you bought and sold. So always remember that. If you have any questions, be sure to leave them in the comments below, and go check out the debit spread video if you don't fully understand what the debit spread is. And also go check out the Iron Condor video, because, like I said, this is the same exact thing as the Iron Condor, except instead of selling two credit spreads, you're buying two debit spreads. So it's the complete opposite. Everything on options, these strategies, they're pretty much the opposite of each other all the time. Calls and puts are the opposite, debit spreads and credit spreads are the opposite, and now condors and reverse iron condors are the opposite. So you guys are learning a lot of techniques on this channel. I hope you guys use them. If you have any questions, leave them in the comments below. Be sure to subscribe to the channel. Be sure to leave a like on the video. Be sure to check us out live. We're live Monday through Friday, market open to market close. And I'll see you guys in the next video.